Hi and Assalamu alaikum. My name is Saad Mansoor and with me are Huzaifa Kassar, Zafarullah Hashim and Usaid Khawar. Today we will discuss the basics of foreign taxation. Foreign taxation is a part of the income tax which is computed using the Income Tax Ordinance 2001. Now before we get into foreign taxation we have to know about two main terms, residents and non-residents, for which let's see what Zafar has to say about it.
Thank you, Saad. So, under resident, we have resident individual and resident company. First, we'll be talking about resident individual. An individual is a resident if he satisfies any of the three conditions. Number one, he is present in Pakistan for a period of 183 days or more in aggregate in a tax year. Number two, he is present in Pakistan for a period of 120 days or more in a tax year and has been in Pakistan for a period of 365 days or more in the last 4 tax years. Number three, he is employee of the federal government or provincial government, irrespective of the country he is working in. Now we'll be talking about resident company. A company is a resident if it satisfies any of the two conditions. Number one, it is incorporated under any law of Pakistan. Number two, its management and control are wholly based in Pakistan at any point in a tax year.
Thank you Zafar for that insight. Now moving on to
Yes, Saad, there's one more term that we should know about, which is called short term resident. A person is a short term resident if he satisfies two conditions. Number one, he is in Pakistan solely due to employment reasons. Number two, his stay in Pakistan does not exceed 3 years. He has to satisfy both of these conditions.
Okay, thanks again. Now that we have completely understood residents and non-residents, let's take a short quiz. You will see a list of individuals on your screen and you will have to categorize them as either resident or non-resident. The answers will be displayed in 10 seconds. So you can pause the video and take a guess. Now, moving on to their taxation, a non-resident person is taxed solely on their Pakistan source income. Meanwhile, a resident person is taxed on their world income, which includes their Pakistan source income as well as their foreign source income.
यार ये पाकिस्तान सोर्स और फॉरेन सोर्स इनकम क्या है?
Okay. A foreign source income includes all incomes which cannot be categorized under Pakistan source income. And as for Pakistan source income, let's listen to a discussion between Mr. Usaid Khawar and Husaifa Kassar.
Within Pakistan source income, we will start from salary. The income chargeable to tax under the head salary will be considered Pakistan source income if it is derived from employment exercised in Pakistan, whether it is received in Pakistan or not, or it is paid by or on the behalf of federal or provincial government.
Moving on to business income. The business income of a resident person shall be considered Pakistani source income if it is derived from carrying out business in Pakistan. And the business income of a non-resident person shall be considered Pakistani source income if it is derived from carrying out business through a permanent establishment in Pakistan.
Excuse me, bro, what if I buy something from the website instead of going to the permanent establishment?
Yes. So, if the sale of goods, services, or any other business activities is, for example, carried out through a website, and those goods, services, and business activities are also being carried out through a permanent establishment in Pakistan, they will also be deemed to be Pakistani source income. For example, if Nike sells, for example, shoes through its website in Pakistan, they will be considered Pakistani source income if a franchise of Nike in Pakistan also sells similar goods in Pakistan.
Moving on to capital gains, The Pakistan source income will also include the gains arising on the disposal of property or asset used for deriving income of any business in Pakistan, or the gain arising on the disposal of shares of a resident company.
Where the business of a non-resident person comprised of providing services, including professional services and the services of entertainers and sportspersons, the Pakistani source income shall be any payment received by a resident person of Pakistan or borne by a permanent establishment of a non-resident in Pakistan. For example, if a South African player is hired by the PSL to play a match in Dubai, the payment received by the South African player will be considered Pakistani source income as it is borne by a resident person in Pakistan.
As for interest income will be considered Pakistan source income if it is paid by a resident or it is paid through a permanent establishment of a non-resident in Pakistan. But if a resident has utilized this loan for his own business outside Pakistan, then this interest will not be considered Pakistan source income.
Just like interest income, royalties will also be considered Pakistani source income if they are paid for by a resident person or borne by a non-resident person's permanent establishment. However, if the royalties being paid by the resident person are used for his business outside Pakistan, they will not be treated as Pakistani source income.
Lastly, rental income will be considered Pakistan source income if the asset or property is leased in Pakistan. That's all we need to know about the Pakistan source income.
Moving on, as I mentioned before, a resident person is taxed both on his Pakistan source income as well as his foreign source income. Now consider a situation where Mr. Ali is a resident of Pakistan. He has earned some income in Australia. Now this Australian income will be taxed both in Australia as well as in Pakistan because he is a resident of Pakistan. This phenomena is called double taxation. To avoid double taxation, countries around the world form tax treaties with each other. The foreign income of the residents of these countries will be taxed according to the rules of the treaties instead of the ordinance. But in case no such treaties exist between two specific countries, the income tax ordinance of Pakistan will allow its residents a foreign tax credit, which will be explained by the following diagram.
Let's take the example of Saad, a resident person in Pakistan. Saad has total taxable income of rupees 2 million, out of which his foreign source income is 200,000. His total tax liability for the year is 400,000. Saad has already paid tax on his foreign source income in the foreign country of rupees 20,000. So, what will be the amount of foreign tax credit that Saad gets? First, we'll need to calculate the Pakistan tax payable on the foreign source income, which is the average rate of tax into the foreign source income, which comes out to be 400,000 upon 2 million into the foreign source income, which is 200,000. And this comes out to be 40,000 rupees. Now we'll see which is lower, the amount of tax paid by Saad in the foreign country or the Pakistan tax payable. As you can see that the amount of tax that Saad had paid in the foreign country is lower than 40,000. So the tax credit that Saad will get is rupees 20,000. To calculate the tax liability for the year, we'll subtract 20,000 from the existing tax liability, which is 400,000 minus 20,000, and which comes out to be 380,000. Saad's tax liability in the end is 380,000 after the tax credits.
This concludes our discussion. Thank you for taking the time to watch this video. I really hope you found it interesting and informative.